Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by getting your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 22nd day of July, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. I have a chart up of the S&P 500 Emini Futures. That is a daily chart. If you want to see the chart, you can't see the chart, then go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds. And you'll have one-click access to the show each and every day. On the days you're out of the office, away from the desktop, and you still want to join the show, I have good news. Go to youtube.com/CFRN/live. There you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay. S&P 500 daily chart. That's what we're looking at right here, right now. We talked about this area being a good place for a pullback. We talked about it being the highest probability place for a pullback. And let's just go over one more time real quick why that is. Okay? We'll start with the fibs. Remember, a daily chart. We're going to go from the swing low, put in back on June 3rd, to the swing high, put in July 15th, and we can see that a 24% Fibonacci retracement lines up with this swing high, and this swing high, and this swing low. So we're sliding into home plate here. Let's see if I can back that arrow out. without moving everything? Yeah, I guess not. Okay. Well, I'm going to have to. There. Just to make sure you can see everything clearly. There we go. Okay. Swing high, swing low, and here we come. Now, where's the BBC in all of this? Because we do know a couple things. On a pullback to that 24% fib, we anticipate a nice bounce. We may not go back to challenge the high. We might not put in a new high. But a bounce, nonetheless, sort of a self-fulfilling prophecy, because so many people watch a daily chart and so many people understand Fibonacci on two different levels. One, Fibonacci is math, right? It's not going away. It's been here since the foundations of the earth, I suppose. But also, many people understand that Fibonacci is what I just said in many cases, or appears to be, or could be, a self-fulfilling prophecy. So if enough people think there's going to be a bounce at that 24% fib, there's a pretty good chance there's going to be a bounce at that 24% fib. Now, that's something all the world is tuned into, has access to. Okay, now let's layer one more thing on here. There we go. We've already found the BBC. Now remember, we said the shallowest possible retracement would be a pullback to the BBC or the 24% fib. When we first started discussing this, at that swing high, from this low to that swing high, we had the BBC right at the 24% fib. Price gave us a very shallow pullback, right? We did not make it to the 24. Put in a new high. This pullback has taken us to the BBC. Do we expect a bounce there? Yes. Did we get a bounce there? Yes. The low from Friday was 29.69.50. 29.69.50. And the high of this session, which began last night at 6 p.m. Eastern, is 29.89.50. So, did a pullback to the BBC give us a bounce? It did. A healthy bounce, yes. How much? 20 points. I'll take that any day. Now what? Okay. If price can make it back to the CFMA1, we expect that to be good resistance. It's been struggling since the market opened last night to do that. And let me just show you what that looks like. These are, of course, last week's zones. This week's zones have already landed in the inbox of all CFRN passport holders and partners. 6:15 a.m. every Monday morning before Wall Street wakes up, so everybody has plenty of time to get their zones on their chart. I will break out the zones to the entire audience, the whole community, on Thursday, as I do. For now, we'll take a look at last week's zones along with price action, because zones have what I call, or what we call, the carryover effect. It was good Friday, it's good today. Now, we've spent a couple of sessions in between this zone at 97/98 and the zone below at 65/66. That's a big zone, 30 points, okay? And here we are, stuck in the middle. Now let's go find the Sunday night low backs open. That's going to be right there. That little candle right there, okay? So we drifted up, and it's not been an easy move in either direction. We've just kind of waffled back and forth, stuck between these two zones. So think about that. This is a 30-minute chart. and where we are on the daily. So one of two things will happen. The BBC will fail to continue holding. It already held. This is a daily chart. It will fail and will go down and check in at the 24% fib, which lines up with this swing high and this swing high. We'll either go up to test the CFMA1, which we anticipate to be good resistance if we do. If the BBC fails to hold, if we start to move lower this session, then the next logical place for price to find good support will be right here at about 29.40. Okay, so that's the daily 30-minute. I'll help you visualize that by doing this. Now, right here in this area, we're below, we're above, we're just right there. Could this thing go either way? Absolutely. So is there no high probability move from here? Well, we had a bullish cross. Price did pull away. Price did pull back. We did attempt to move higher. In fact, we got up as high as 29.8950. Remember, 20-point bounce. And then we're back below, we're back above. If this candle closes at the bottom of the hour back below, that's just a clear sign to just stay away from this market right here, right now. Because when price is above and below and above and below on this 30-minute, that's the market sending you a clear message. I haven't made up my mind yet, but when I do, I'll let you know. Well, what will that look like? We'll have a leg, a retracement, and then a continuation of the leg. Or we'll have a leg to the downside that clearly pulls away from the BBC, pulls back, the BBC holds, continuation of the leg. When it happens, you'll recognize it. If you've been following the show, if you're a passport holder, if you're a partner, and if you are not any of those things, we invite you to be one of those, any of those. Just visit our sign-up page for the trial at eminitrading.com. That's eminitrading.com. Email us support@cfrn.net, or just give us an old-fashioned phone call at 949-42-EMINI. 949-42-EMINI. Let's take a quick look at the numbers from around the world. These are the cash markets. Then we'll go to Michael, get a recap of what happened in the live training room today. Currently, the Dow is down a little over 1 point. NASDAQ is up 50. S&P 500 is up 6.5. And the Russell 2000 is at the flat line. In the commodity basket, crude oil up 62 cents, trading 56.25 last. That's a gain of a little over 1%. Gold at the moment unchanged, trading 14.2670 last. In the Asian markets at the close, the Nikkei finished the session down 50 points. Shanghai was down 37, and the Hang Seng lost 394 points. For the Shanghai, that's a loss of 1.25%. For the Hang Seng, that's also a loss of 1.25%. In the European markets at the close, the FTSE was up 6 points, the DAX was up 29, and the CAC was up 14. No movers, no shakers there. That gives us a red day in Asia, green day in the UK, and it is a mixed day here in the US of A. With that, let's go to Michael, get that recap of what happened in the live training room. I'll be back. We'll talk to John, all that, and answers to your questions. Take it away, Michael.
Okay, I got it. There we go. All right. Here we go. Good afternoon, everyone. Let me bring up my question box. Okay, there are no questions yet. Good afternoon, everyone. Today is Monday, the 22nd day of July, 2019. If you have not taken a free trial with us, you can go to the home page at CFRN.net, and right over here in the right-hand column it says apply.cfrn.net. You can click on that, or you can go directly to eminitrainingschool.com. It's https://eminitrainingschool.com. You go to that page. All you need to do is put in your name, your email, your phone number. Tell us your biggest trading challenge so we can tailor the training to you. Okay? You hit the send button and you'll be sent all the information you need to get into the live training room. All right? Now, to recap. If you're going to read the spreadsheet, you're going to read all the CFTC risk disclosures down at the bottom. As I said, today is the 22nd day of July, 2019. Today we made 8 ticks in crude, 1 tick in gold, and 1 tick on the ES. That put us at 102.50 on the morning session. It took 83 minutes and 9 trades today to get to the goal for the day. At that point, we're at 102.50. And we took a total of 10 trade opportunities this morning. So on the month now, we're up 1857. That's over 15 days, averaging 123 per day. And on the year, we're at $16,405. That's over 128 days, averaging 128 per day. Now, I know that number doesn't seem significant being halfway through the year like we are, but if you add a 0 onto it and you're up $164,000, that is significant. Okay, for trading 2 hours per day. Really, trading 2 hours per day, $164,000. You can do it, and we can help you. All right, next, gold. All right, we'll start out with the gold. Okay, now gold, our first trade of the day this morning was the stop out. Stopped us out to the tick, and then it went and did what it should have done right here. Okay, so we stopped out on the first trade on gold. We were minus 8 ticks. Then we picked up 4 ticks here to put us at minus 4. We had a break even there. And we picked up 5 ticks here to put us at plus 1 on gold. We missed the next trade. And then during the break, it did absolutely nothing. Yeah, it was nothing. Not even a single trade set up. It's starting to set one up right now. Now we're going to roll gold at the end of the month. We're almost there. Okay. So we're going to monitor the volume between this contract and the December contract. Because December is what we're going to next. Okay. Okay. The euro. Let's see. On the euro, we started out right here, and we had a break even on this one. I totally wasn't paying attention to it, or I would have put my stop at plus something, but I wasn't paying attention to it. And then we had another break even right here. And the euro, just like the gold, did nothing during the break. Now we have very limited news events this week. So I think crude oil is probably going to be our biggest player. With all that's going on over in Iran, in the Hormuz Strait. I'm thinking crude's going to get back up to 58, 59 in that area. We'll see. We will see. And that is by the end of the week, but by Wednesday probably is what I'm thinking. And so crude, you see I just put the weekly trading zones here on crude. Crude went down and tapped this zone this morning and bounced right off it. All right, the next zone up above is at 56.20 or something like that. I'm not exactly sure where. On the crude. Now in the pre-market, crude tanked. And then we missed this first opportunity right here, which would have given us the goal for the day right then. But we grabbed a second one right here. We picked up 8 ticks. Okay, then we had a break even and another break even. There was one more trade right here on the crude where it went down and tapped the weekly trading zone again. And I missed that one. It came off of that And now we're into the break, and we're trading above the BBC, but the slingshot's just not giving us any long opportunities. Okay. On the ES, let's see here. On the ES, yeah, we just had the one trade set up right here. Went up to the high of the day, didn't go through it. Came back down off the high of the day, down to the weekly trading zone. It started out inside the zone, but then it didn't give us any opportunity getting away from the zone until we established a trend. Once we established a trend, we took the trade on the close above the trend line. We got 1 tick profit on that trade. Since then, there's been nothing. Absolutely nothing. Okay. So that was the morning session in a nutshell. I mean, we had 10 trades, but we just got the goal for the day, and that was all we accomplished. All right, today, the 22nd day of July 2019, we made 8 ticks in crude, 1 tick in gold, and 1 tick on the ES. Put us at 102.5. We did miss a few trades, a few good winning trades. Today took 83 minutes and 9 trades to get to the goal for the day. At that point, we're up 102.50, and we took a total of 10 trades today. So on the month now, we're up $1,857.50. That's over 15 days, averaging 123 per day. Now, again, that is one contract, 2 hours per day. If you just add a 0 on that, that's where we want to get you guys. You can make $1,230 per day in 2 hours. That's not too bad. $500 an hour. It's not too bad money. On the year now, we're at 16,405. That's over 128 days, averaging 128 per day. Again, just add a 0. That's where we want to get you guys. Not promising we can get you there, but I'm promising we can try. Okay. Now, if you have not taken the free trial and you want to take the free trial, go to the homepage at CFRN.net. Over here in the right-hand column, it says apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. Or you could just go directly to this page, eminitrainingschool.com. And scroll down, and all we ask for is your name, your email, and your phone number. And you can tell us your biggest trading challenge, and we can tailor the one-on-one training to your biggest trading challenge. Okay? Hit the send button, and you'll be sent all the information you need to get into the live training room. Now, once you're in the live training room, if you have any questions, you just throw them out there. There's a question box, and you just put your questions in the question box, and we'll answer every one of your questions to the best of our ability. Okay? And with that, that was 8 minutes. I don't know if Dwayne's made it back yet, but with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking the South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Okay.
All right, I spoke to John. He's going to pop in here in a minute if he's not in yet.
Let me go check. Nope, not yet.
All right, he's on his way. Okay, let's take a look at, well, this was Friday. On the radio here, we put out a radio free trade, 29.89 to 29.84, 5-point move, $50 per point, $250 per contract traded. Of course, for the trader who's earned the right to trade 10 contracts, that would be a $2,500 move. And that happened right here, live in front of you, if you were here for Friday's broadcast. We also had a Concierge Trade Alert on Friday. It said to consider being short $29.91. We dropped 20 points. That's $1,000 per contract available. That is what the market made available. Of course, getting out at the swing low and the swing high, as we've discussed, can be quite difficult because no one knows that it's the swing high or swing low until after the fact. Not man, nor beast, nor machine. Nobody knows till after the fact. We do have something called an exit signal. And let me show you exactly what that looks like. The black step line. As you'll notice on this move down, the step line is primarily on the left side. As you look at the screen, on the left side of that red and falling CFMA1. Now, when you're red and falling here, and you're red and fell here, and you're probing the bottom, you don't have to go short, but my goodness, please don't go long, okay? This is about as good as it gets, from $29.91 down to the swing low at $29.69.50. Now the exit signal can't get you out at the swing high or swing low. Well, we already covered that, right? So what we're looking for is we're looking for this step line to make a decisive cross across that red and falling CFMA1. And then once it crosses, we're looking for the first green candle, because this is a down move. We're looking for the first green candle to close above the step line after it crosses over. That would be this candle right here, which closed at $29.78. So from 91 to 78. What is that, Michael? 13?
Yeah, so 13.
Okay. So I do have a calculator. Here it is. So 13 points times $50 per point, $650 per contract traded. See, that's different from per contract available. See, this is what the market made available. So I have no way of knowing, where you might have gotten out on this move. But I do know that if you entered here at the published price, and if you exited on the exit signal, as we teach it, as our indicators show it to you on the chart. Now this exit signal, just as the entry is identical on everybody's chart, the exit signal is identical as well. So from $29.91 to $29.78, 13 points, $650 per contract traded. So there's nothing nebulous there. There's no question. Again, here, no way of knowing where you got out. You didn't. If you got out at the swing low, it was by luck and luck alone. But here, it's to the tick. Okay. So that's $650 per contract traded, which would be, well, you guessed it, $6,500 for the person, for the trader, man or woman, who's earned the right to trade 10 contracts. A function of that part is simply a function of math, has nothing to do with any specific methodology or strategy or indicator set. That is baked into the market cake, into the S&P 500 E-mini as outlined by the Chicago Mercantile Exchange. So for all of you that participated in that, whether you were in the Concierge Trade Alert or you just enjoyed that radio free trade, that bell's for you. All right. Okay. Now let's take a look at what happened last week with Logic. And so far today, we've had, remember, thumbs up means we reached the target. Often there are multiple targets. When you see a PT, now the thumbs up means we made it to the only target or the final target. A PT means we made it at least to the first target. And an X means Well, you can probably figure that one out. It got stopped out. Okay. Z's mean it has not triggered. So we got 2 stopped out so far. Okay. We're in week 51. That's kind of a big deal because we're coming up on week 52. And week 52, that will be our 1-year anniversary of Logic 247. We have issued so far 2,310 alerts over the past 50 weeks. And our benchmark of 20% being stopped out has held true. So we feel blessed. Yes, we've worked hard, but we also realize that that we're blessed. And those of you that have been able to participate, so are you. Last week, 52 total alerts issued. Now that was not on purpose because of the 52-week anniversary. It's just 52. 12 of them never triggered. That left us with 40 actionable alerts. 28 of them reached the final target. 5 of them reached at least the first target. 7 of them were stopped out. That's 7 out of the 40 actionable alerts. 17.5% of actionable alerts were stopped out. And here we are, week 51. Not area 51, but week 51. And then next week, 1-year anniversary. And I believe, Valerie, did we not have a discussion on Friday, considering it's kind of a big week for us, 1-year anniversary, we're going to kick up our heels and do something? Is that true?
Yes, I was going to make cupcakes.
Yeah. Yeah.
Punch.
Valerie's
Can
going
we
to
have
make
punch?
cupcakes and distribute them to everyone.
Exactly. It's a road trip.
So when
Yeah.
FedEx shows up at your house, folks, with that little box, answer the door, because that cupcake will melt in the sun. So, all right. Okay, let's take a look at the Concierge Trade Alerts from last night. Any sign of John?
Hang on, let me go look.
He'll probably jiggle my phone when he gets here.
Nope, not there yet.
Okay.
Not there yet.
Last night, here, why don't you take a screenshot if you want one. There you go. 5, 4, 3, 2, 1. Okay. Consider being long at or above 29.90 on the S&P, and the swing high of this session so far, 29.89.50. Now the Concierge Trade Alerts differ from the Logic 247 alerts. The Concierge Trade Alerts are a static report issued every evening, hopefully before 9 p.m. Eastern. That's always what I shoot for. Often it's right after the Globex Open. The static report is taking a look at the entire upcoming session. The numbers, the calculations are all based on historic price behavior. The Logic 247, those are dynamic, in-the-moment alerts. Now, as an example, if we print 29.90, we want to consider being long 29.90, and as long as we're above 29.90, we only want to look at long trades, okay? Long opportunities, a chance to buy this market. The short side, the line in the sand there, 29.75. Now right here, we hit 29.74.50 on this candle. So we walked 2 ticks over the line in the sand. And that's really how you should look at it. You got a line in the sand here. You got a line in the sand here. Anything in between is the market trying to make up its mind. Say that again. You want to be long here and above, short here and below, and anything in between is simply the market trying to make up its mind. So nothing happened from a concierge perspective other than we went 2 ticks over the line, which reminds me of a song. Oh, that was 1 toke over the line. Hey, is anybody going to the Woodstock anniversary? 50 years since Woodstock. This summer, August, yeah?
Is it really?
Yeah.
Wow.
It was on and then it was off. Now I understand it's back on again. Some record company has come out with a 36 CD boxed set. It's $800. I won't be buying one, but if you buy one, I'll come over to your house and listen to it.
It's all on Spotify.
And watch the video. They say they've recorded, they think they've got every note played at the festival on these 36 CDs. I wasn't there.
I wasn't there either. I wasn't born, I don't think. 50.
Well,
actually, I was born. I was just a little baby, though.
I was 10 years old. So. Okay, let's look at the Dow. Again, all the zones you see on the charts are last week's zones. So Concierge, consider being long 27 to 80, no cigar. Short at or below 270.90, and so that would be, that line would be right here. Okay. We stepped out of that area and then right back in. 270, we made it down to 270.71, so that's 19 points. Over here, we dropped to 270.78, so that's 12 points. Nothing to write home about, and they didn't come anywhere near the long side. Again, the markets are going sideways, looking for direction. And that's a real good indicator for you if you're a partner or passport holder. When you get that static report at the beginning of the session, before 9 p.m. Eastern, most nights, as long as price is in between the 2 lines in the sand, be very, very careful going into that market, because the market itself has not made up its mind. Russell. Let's see what we got on the Russell. So they're being long 15.59. Got nothing there. Line in the sand untouched. Short below 15.44. Untouched. See how this is playing out, guys? Market after market. On the indices, we're getting the same thing. Market rolling sideways, looking for direction. When that's happening, we always have to go to a higher time frame, which would be our daily. All right, what's happening? Well, we hit the BBC, we bounced, we got a 20-point bounce from hitting the BBC, but this is not very convincing to the upside. Could it be that this BBC is going to give way and we're going to go down to check in at that 24% fib? It's very possible. I need to put that back in the right spot. There we go. And that number is, 29, well, there it is, 29.54, 29.55. Okay. All right. In Q. Oh, and if you were in on last week's swing trade for the NQ, it's true, this is not your father's swing trade. What I was pointing out here, if we go here, this was the actual NQ swing trade to sell 79.44 with a target at 78.50. Okay, 74 points. Did I calculate that on the show Friday? I think I did. 944 minus 850. Yeah, that's right. Yeah. Okay. 74 points, $20 a point. $1,480 per contract traded. All right. Now, important prices, important areas are almost always tested. So you see where I'm pointing at here. Here is the entry. Come over here. Here it is again, right? Took us there, there. Important prices, important areas are almost always tested. It doesn't matter if we're on a 1 minute chart, a 5 minute, a daily chart, a weekly chart. If you remember this, important prices, important areas, almost always tested, it will serve you well. Hey, John, welcome to the show.
Hang on a second. His mic's not open. Let me just open it up. There you go. Okay, now his mic's open.
Hi there.
Hey, John, welcome to the show. How are you?
Thanks. Not too bad. Thanks for inviting. The market had this sort of possibly overdone sell-off, I guess, on Friday. It kind of happened a bit sneakily. Markets kind of just gave it up during the day and ended up down quite sharply. The Nasdaq was down like about 100 points. However, they're recovering today quite impressively, led by the Nasdaq. Nasdaq's futures up about 70 points right now, which is pretty impressive. Microsoft, which got a bit of a shellacking when it came out with better than expected earnings, is rebounding today. And we mentioned there's a bit of a shakeout in the transports that seems to have clawed its way back. Whenever a market claws its way back from a sell-off like this, it's usually pretty constructive. Obviously, the situation over in Iran probably had a bit to do with the market selling off on Friday as well. It looks, even though it's sort of nauseating to see the behavior of these people with having the audacity to put an Iranian flag on that ship, and generally the way they pull this thing off.
They got to know this is not going to end well for them. I mean,
well, look, if it was up to me or somebody who could do that, they wouldn't have a navy by now. That's the only way to deal with this kind of thing. That's what Reagan did, and they need to do it sooner rather than later, because they've got to take this this regime down. I mean, it's just they're out of control, and they've got to be stopped. And they've done a lot of damage already with these tankers, and the only way to listen, you got to hit them 100 times harder, and they'll get the memo. And I'm surprised that the British Navy frigate that was racing to the scene didn't take out that chopper, just a sort of the opening salvo kind of thing. But
right.
Anyhow, there's more trouble ahead, I think, and the metals are reflecting that. They're rebounding again today, the silver in particular. The silver had the first sort of pullback from its meteoric liftoff last week or two, and it just pulled back a bit, but it's back up at another 24 today. It's 1644. It really looks like it's got 18 written all over it. And I would expect some consolidation at 18 if it gets up there, and it could be very reminiscent of 2010. Back in 2010, the market spent. Oh, sorry. So in 2010, the market spent 2 months going sideways at 18 in the silver, and then next thing you know is 1920, and then it was in the low 20s, and then it was in the high 20s. Next thing you know, it was 30, then it was 36, and before you knew it, it was 50. And on the middle of September of 2010, we may have been one of the first to come out. And I don't think anybody put it exactly like the way we did, which was mid-September. We said we thought that silver could hit $50 by the second quarter of 2011. That was a pretty bold call, pretty audacious call. And believe it or not, the 1st of May was the day that they took out Osama bin Laden, and that was the high on the silver at about 49.80 or so, happened in the middle of the night. And then it pulled back, and ever since then it's kind of been down to the recent lows, and now it's turned. And
Which one, John? Which one?
The silver. You know, like I say, the recent lows. You know, it's been down tested. It got down to 13.5, I think, a while back. You know, it's tested this 14 area since, but it's clearly, definitely changed dramatically, the whole structure. It's really starting to look very bullish. Got a kind of a W bottom there, and definitely looks like it could go up to that 17.5, probably around 18, and I think that would be very, very positive indeed to consolidate around 18. And I really think it'd be a kind of a deja vu move. I know, you know, look, I know ultimately we're looking for 65 to 75 on the silver, and down, you know, potentially in the future up to about 135 on the silver, about more than 10 times its current price. Could even go to 165 actually. But I think you know, if we go up to, look, if we go to 2400, theoretically on the gold, theoretically we should be at about 65, 75 on the silver, given you know, the ratio of being at $50 when we hit 1900 the last time, and the fact that, you know, the previous time gold was 875 when we hit $50. You know, I think you'd better start being pretty bullish on silver now, because you think about this: the first time around, $50, $875 gold, $50. Second time, $1,900 gold, more than twice the price. Silver was $50. Third time, you know, if we're at 2,400, do we stop at $50 again? I don't know. It could.
That's a good question. That's a very good question.
One of these days, if it does break, and look, it might do that. It might have a sort of a triple kind of a top, and then the fourth time will probably be the one that really, really goes crazy. So it's probably going to be a pretty exciting time in silver in the future, and all those ads they've been hollering around for years. People, I guess, who bought silver anywhere between 14 and 16, 17 dollars.
I hear William Devane in my sleep.
Right. So you know, those people are going to be richly rewarded one day, I would think. So, but I want to say something else that's pretty interesting. You know, if you go back, and this is a real big lesson for the future, and it's a very hard thing to get your arms around. When I think I remember talking to you, Dwayne, when in 2009, when we were coming off the lows, and the situation was very grim in a lot of cities and towns, you know, with boarded up shops and stores and things, and you know, deserted streets and empty restaurants and things like that. Was really a very tough period. And you know, the market leads the you know, the economy, and you have to understand that, you know, when you're coming. I mean, it's just like 1932. The bottom of the market was in July of 1932, right when probably when the soup lines were the longest. You know, and so the market always sort of sees the bottom ahead of time. The market bottom in World War II was 6 months after Pearl Harbor. You know, it was the middle of 1942. The market knew the war was won 2 years before it actually happened. And a lot of times that's a tough thing to deal with, because you know, when you're in the middle of a war and things are really bad, and London's getting bombed every night and things like that,
right.
You know, it's hard to go in and buy the market when things are at the worst, but that's the way the market works. And the reason I'm saying that is because if you go back to 2009, 2010, I remember seeing some of the new highs that were popping up, new 52-week highs that were popping up, in those early days. And I remember there was that Keurig coffee was one of them, and a Guitar Center was
what
another
about
one.
Green Mountain Roasters?
Yeah, right. Those, there was a lot of weird kind of unexpected companies that were doing really well, and they were making new highs. And if you go back and look at Baidu, which had got beaten down, after its IPO, sort of like Facebook getting beaten down to 18 and coming back up. All of these, and if you go back to Microsoft and Apple and Amazon and all the high flyers, all the mega mega performance of today, they were Netflix, for example. All of these stocks were starting to hit new 52-week highs pretty early in the game, long before anybody else, and those have been turned out to be the mega winners, and some of them are still going even higher. I just took a look at Netflix. Actually, you might want to put Netflix up, Dwayne. Sure. By the way, look at that. Before you do that, look at this ratio breakdown.
Yeah, I wanted to ask you, could you maybe break that down for the audience and explain how you interpret that, what it means?
I think that's an all-time high for that ratio.
Let me put it on monthly and crunch it up.
Yeah, it is. I'm pretty sure of it. Yeah. So, nobody saw that coming, actually, myself included. Everybody thought that the ratio would sort of go up to about 85 or the 80-85 where it previously, fell away from, if you like. The thing we don't know right now, it's a pretty big fall. It's pretty big pullback here. Pretty dramatic sell signal. I think if you go back and look at each of the previous sells, they've produced pretty dramatic ratio breakdowns. So what it means is that the number of I guess it's silver divided by gold, or gold divided by silver rather, is 90 roughly speaking, or 86 now. So the silver price is starting to pull ahead of the gold. And that ratio, as a result of that ratio is, breaking down. Nobody does it mean that ratio is going to go to 35 or 30 even? It could do. It could do in the future. It certainly looks like it's going to go to 70 or 65, possibly pretty quickly. And if it's anything like what happened from 2008 onwards, we could be hitting a new low on this thing 3 or 4 years out. So remember, in 2009, we had the first 4 to 6 years were all up in the market. So the reason I'm saying this is a lot of the gold stocks are pretty close to, even some of the juniors are not that far away from hitting new 52-week highs. The juniors usually take a while. The highest quality gold stock out there, Royal Gold, was the first to hit an all-time high, and as and most of the others are hitting new 52-week highs. They're not hitting all-time highs by any stretch, but they're hitting new 52-week highs. So the whole sector is kind of where these mega stocks were, these emerging mega stocks were back in 2009. So, this is probably pretty early days. And just from our own comments on this show, where we, you probably heard it here first, we said that we projected that Royal Gold would hit a new all-time high several months ago, and it did. And look at the incredible takeoff since. It's hitting another one almost today, actually.
Yeah, no, it is.
So, yeah,
look at
so
that.
it's just, there's no stopping this thing, and you have to ask yourself, why is it happening?
Now, this is a company that they just collect royalties. Is that correct?
Yeah, and the obviously the market, this is incredibly bullish for this stock, because when you're in a new range between 14.25 and 14.50, we haven't been there for a long time, and that extra $100 or $200 that we've had increase in the last few months, it took a while for the market to figure, to get the memo, if you like, but it sure is getting the memo right now. The market is just building more and more wealth and price and value into this stock, because the market's anticipating higher prices to come. And as long as that continues, I mean, it's very, very bullish for gold and silver and the metals in general. So this could be, I mean, listen, we could be talking about this stock in 6 months' time, or a year's time. It could be $200 a share. It could be $300 a share in the future. It's a very, very powerful situation. And, obviously all the other stocks are going to, go the same way, because people will be looking around for undervalued stocks. And most of these juniors, high quality juniors, especially those that are about to go into production, are going to be the biggest winners, because generally speaking, when a company starts production, because if they start making money, they start producing revenues, and if they're getting higher prices for their product, as well as increasing their output every month, there's generally a tenfold lift off most companies that over the first year or two of production. So that's a little hint to anybody who wants to take a look at stocks like that. Also the grade quality, the higher the price of gold goes, it's a very strange thing, but the higher the price goes, the better the grades become more bullish, if you like, because if a grade is uneconomic at a quarter of an ounce per ton, or maybe 0.1 of an ounce per ton, let's say, right? And then the gold price goes up, it becomes economic at that price, and that's a huge deal. That's a huge thing. There was an opportunity to buy a company back in 2005 that had 3 million ounces of gold in tailings, which is runoff from previous production, and the price of the stock was about 12 cents, but the problem was the cost of production was $500 an ounce, and the actual price at the time was $475. And if you remember, I mentioned in early 2005, first quarter, price of gold was $425. So as the price of gold ran up from $425 to $475, I think this stock went up, probably from 9 cents to 12 or something. I can't remember, but it was around 12 cents, and there was an opportunity to actually buy this stock, pick it up, for maybe take it over 15 cents a share. And then suddenly, but it was risky because we couldn't see the future. I mean, we all thought the gold was going to, look, gold had been capped. And this is an interesting thing about silver. It's like, silver is being capped for 50 years at $50, right?
Exactly.
Well, gold was capped for all of the 90s and most of the 80s at $500 and never went above it. But when it broke above $500, what happened next? Before you knew it, we were $700. Not so long after that, we were $900, and we've been way higher since then. So these kind of big breakouts like that are just huge, and I think there's one coming in the silver in the next few years for sure. Possibly of gigantic proportions, because if you look at what happened with gold, we basically broke 500. We've actually been up almost fourfold since then. So if we break 50 up on the silver, theoretically we go up to about 190 on the silver on the same scale. So when it comes, but here's the story. So as soon as gold sort of started running 500, 600, 700, this stock, I'm not kidding you, this was in February of 2005. By June of 2005, the stock was $1.50. By the end of the year, it was $3. And it was ultimately taken over at $9. And here's the reason why it went from $1.50 to $3 was by the time gold got to $700 or so, or maybe 600 was, whatever the number, they were able to re-establish or revise or upgrade their ounces from 3 million to 6 million. So what happened was the increase in the price of gold liberated from the tailings an additional 3 million ounces of gold. So when you jump from 3 million ounces to 6 million ounces, that's a huge deal. I mean, that's just off the charts. That's why the stock went from almost nowhere to $9 a share. So the impact on all gold miners, but especially those undervalued and that have a lot of holdings, especially high grade holdings. Believe me, the people will be burning the midnight oil trying to figure out the value down the road in these stocks. And when it happens, it's going to be a riveting experience. So so look, in spite of the rally today, I wouldn't say we're out of the woods just yet. But it looks like Trump is meeting with one of my heroes today.
Oh, really? Who's that?
Imran Khan, the Prime Minister of India, of Pakistan, rather. Sorry, excuse me. He's probably one of the greatest cricketers of all time. Unbelievable guy, and has made it to manage to get to become the Prime Minister of Pakistan, which is in of itself an awesome accomplishment for him, and especially the complexity of the country. And I think he's doing a fantastic job for the country. So we haven't really heard too much strife in Pakistan for basically since he became the Prime Minister. He's really, hopefully he'll continue to do great things for Pakistan. And maybe, smooth out things in Afghanistan and maybe bring peace to the whole region. He's very, very, very impressive guy. I mean, he really is one of the greatest cricketers that ever lived. I mean, he's just an incredible guy, Imran, and an all-round, just a fantastic individual. So, I mean, Pakistan deserves it, frankly, because they've had a very rough time in the last 30 or 40 years. And there's been a lot of assassinations and things and attempts at that. And it really has quietened down remarkably since he took over. And it wasn't easy. It was a very tough assignment for him to actually get to the top spot. And hopefully he can hold it and continue to do great things.
We are looking at a Fed meeting next week.
Yeah.
You think we're going to get the rate cut?
Oh yeah. They that's part of the reason why the market went down on Friday.
And they're looking at, from what I'm reading here, article in the Wall Street Journal, comments by New York Fed President John Williams has boosted expectations that the central bank will cut rates by 50 basis points.
Well, I hope he does.
So that's
the reason.
cut.
That's the reason. Apparently they said that they were going to do a quarter, which is why the market sold off on Friday. But by the way, the Fed got a bit of a pasting from Trump this morning again. And Trump's got a point. I think we talked about this a long time ago, back in the early days of the show, about the 18th century. No, wait a minute. The 19th century grew at about 1% a year, right? Mm-hmm. The 20th century grew about 3% a year, and the 21st century, at least for China, has been growing, between upwards of 9% a year. And, and the world has definitely been growing faster in the 21st century. There's no question about that. Some countries have been growing. I mean, Ireland had 21% growth in a quarter there back in 15. So this whole mentality, this Fed mentality, and about always raising rates and killing these booms and killing growth, and like I say, the 90s boom peaked in February of 1997. How do we know that? Because that was the month when we created 750,000 jobs in 1 month. We never did that before. That was the peak of that economy. And the Fed didn't need to raise rates going into 2000, the market was already going down the tubes, but they overdid it, and we ended up having a crash into which was exacerbated by 9/11 as well. But the the Fed has been in this, and then they did it again in 2007. I mean, the Fed basically created this Great Recession, and they had to bail us out of it in the end. So the Fed. And look, it took a long time for this economy to recover, and by many measurements, it hasn't recovered anything like as well as previous recoveries until Trump came into office. So, doing something new, and I mean, one of the big things they were talking about this the other day, the deregulation is having a gigantically positive effect on the economy, as is the money coming back from overseas, as are the tax cuts. And, if what Trump says is, if the Fed hadn't raised rates, how much better would everybody be off? Possibly a lot better. We might be growing it. If we were growing an extra % or 2%, what does that do to the debt? That pays down the debt quicker. It stops the debt from rising. There's all kinds of positives from increasing growth. So if we are fortunate enough to get 5-6, and we've had spurts of growth to 6% before. We had one in 2003 in the fourth quarter, and we've had a few occasionally since. But the Fed jumps on those like it's, oh my God, we can't grow at 6%. That's not allowed, and yet other countries are doing it, and we need to be doing it because the infrastructure requirements these days. I mean, the U.S. has got to be, China. Trump built China, or the U.S. built China, but America needs to rebuild itself right now. It needs to rebuild a lot of the infrastructure. I mean, it's kind of, I kept looking at the skyline of New York. I mean, it's starting to get a little, I mean, it was the forerunner of Dubai, let's face it, and Hong Kong. But, Dubai has shown everybody what's possible when it comes to building skyscrapers. But New York, these matchstick skyscrapers.
Yeah,
these days.
what do you think about those?
Well, I mean, they're kind of weird. You kind of look at them. Look at that second picture on the left there.
This one here, John?
No, the one down to the left.
Okay,
That
right.
one. I mean, look at that one. They really are kind of matchstick type buildings, and they kind of look. They look like very vulnerable, frankly.
Well, they do. They look weird. They look like something out of. That's where George Jetson would fly into, to have dinner with the family. Seems like, I mean, that's what this picture reminds me of, is the Jetsons.
Yeah, it's kind of life imitating art, and but that's an amazing picture. Wow. I mean, I guess the reason why they're building these matchsticks is because they can sell the whole floor as a unit kind of thing, so that everybody gets 360-degree view, and maybe they don't probably, and the cost of real estate is so high that they get the bang for the buck from the minimum
they're airspace, right?
Yeah.
Now, would you? Well, I'm sure they've done. I'm sure they've done all the math, but I wonder how deep, compared to a conventional skyscraper, how deep they have to put those footings to give this thing stability.
That's amazing. Yeah, they look. I mean, boy, it's. By the way, matchstick is my little coin that one myself. Matchstick skyscrapers, but
I think that's kind of what they look like.
Yeah.
Now, what's the official term for them? Do you know?
Don't know. Very expensive.
New York City. Let's just say new skyscrapers. New York City super tall skyscraper boom. Okay. These 20 plus skyscrapers will forever alter the New York City skyline. Okay, there's the One World Trade Center.
And that is a beautiful building.
That is, yeah. Yeah, it is. So this is a proposed building. Okay. Central Park Tower. One World Trade Center will still technically be taller than XTEL's Central Park Tower. Wow. More than a dozen of its apartments will ask more than $20 million.
Yeah.
Yeah, I just wanted to see these.
Look at that one. Wow, talk about a view. Talk about owning Central Park with that picture. Jeepers.
Wow. That's amazing.
Look at Trump Tower to the left. Looks like that Trump Tower, just a few buildings to the left there.
Here?
No, down below that. Looks like
here.
Looks like somebody got in his way.
What a commanding view.
Yeah.
New York City super tall. Let's see what else. The super tall towers transforming New York City's skyline.
That's a staggering picture. Look at that.
Incredible.
And, they're talking about that in London. That I think we talked about this a while back. That they're going to. There's something like 230 new skyscrapers scheduled for London in the next few years. Some massive amount of new buildings, new skyscrapers in London coming. It's going to.
You need to get that?
Yeah, I think so. Listen, I better wrap
All
up.
right, John.
Just on that growth thing, certainly interesting, and that Trump is kind of beating away at it today.
Quick question from the audience. Are you familiar with Dr. Steve? And I have no idea how to pronounce his
Sugar.
Yes,
Yeah.
that's it. Mm-hmm.
Yeah.
Any thoughts? Member of the audience, Mike, just wanted to know what do you think about him. Do you give any merit to his work?
I think he's pretty good. He's been very bullish on the market. He was expecting new highs, and we got him. And I think he's still looking for a big move up. So.
Also, according to Mike, Trump signed an order last week that all infrastructure projects in America must use 95% American-made steel.
Yeah, I think that's a good idea.
He really is making good on that America First promise.
Absolutely.
All right, John.
Okie doke.
Thanks.
All right, thanks a lot.
Okay.
Bye.
Talk to you soon. All right, here we are. S&P 500 Emini Futures still grinding sideways. Okay. Dow, the same. Russell, the same. NQ led to the upside. And if the NQ kicks it in gear and starts moving higher, look for the others to potentially follow. Crude, quiet, sideways, right inside last week's zone there. And look at gold. I mean, wow. Somebody should check the patient's pulse here. Now, the longer this thing coils, or consolidates, whichever term you use, the bigger the boom when it cuts loose, as the theory goes. Okay? All right. I think we've covered it all. We covered the Concierge. We took a look at logic. And again, this week, off to a good start. Next week, there'll be lots of festivities, 1-year anniversary. Week 50, again, we had 42 alerts issued, 12 never triggered. That left 40 actionable alerts. 28 hit the final target, 5 hit at least the initial target, and 7 were stopped out. 17.5% of actionable alerts stopped out. So as we head into our 1-year anniversary, we are in week 51. And S&P stopped out. The Dow PT so far. Valerie recaps these for us, so she'll update that appropriately when it's time. Here's an NQ already flagged as a no trigger. And then we've got gold. There's another stop out. That's copper. Copper, a move from 273 to 272. A 1 penny move pays $250 per contract. Let's take a look at that crude or that copper for just a second.
Yeah, I believe it was about a 50% move before it rebounded.
Yeah. Well, we triggered, see, the number was 273. We triggered right there. So it had a drawdown of just a penny. And so that's $250 per contract traded. We don't want to risk any more than $300 per contract on a Concierge Trade Alert or a Logic 247 alert. Less if possible. We teach our traders a 3-step method to go in and determine where the stop loss needs to be based upon market structure. So with the trigger here, stop loss should have been about 274.50, which didn't get hit, and the target 272, that did get tagged. Okay.
So that's an error.
If you have any questions, just shoot me a message. All right, guys, any final questions as we head into our good word for the day, wrap this up for a Monday, wait for this market to kick it in gear. Now, next week should be a real roller coaster ride with the Fed announcement. And if we get a 0.5 point rate cut, look out above. And if by chance we don't, then I got to say, look out below. So, we'll see what it turns into. That audio clip that I played you guys Friday, I'll unveil it tomorrow. It's a full-blown commercial with video and everything now, so I'll play that tomorrow. Let's go to our good word for the day, which I have right here. Last week we were talking about staying focused. Today we're going to talk about the wilderness. You ever feel like you're just a lone voice crying out in the wilderness? Well, don't feel alone. Exodus 16:1. The people of Israel came to the wilderness. The Israelites discovered that for them, the way into the promised land was through the wilderness. This is God's furnace of refinement. To survive in the desert, we have to follow his lead, stand firm in faith, and lean into him for daily manna. As we cast our cares on him, because frankly, there's nowhere else to turn, the stumbling blocks which keep us from a deeper relationship with him will begin to crumble. Our self-sufficiency, as well as our pride in ourselves and our own achievements, start to be stripped away. The wilderness is a silent place. If you've been there, it's the loudest silence you've ever heard. No distractions, no signposts to the nearest oasis, no cell phone coverage to point you to the closest road. That means God can finally get your attention. Sometimes he'll want to talk about besetting sin, sometimes about the calling he's placed on your life, sometimes about a gift he's given you that you've maybe overlooked. And once you're listening to God, you start to realize he's the only way out of the wilderness, as well as the only door into your calling. And if you haven't found your calling, please talk to him. He created you for a purpose. What a shame it would be to live out this life and never know, never experience that purpose that He created you for. Because when you're walking in that anointing, when you're walking in that purpose and direction that He created you specifically for, there is nothing else like it. Life is empty without it. Now, you might be thinking, well, I don't know, I'm having a pretty good life. I don't know what my calling is, but feeling good. Press in. Find the call. If you think it's good now, it only gets better. Remember, once you start really listening to God, you're going to find it. You're going to step into it. You're going to walk in it. You're going to run with it. And you and God will change the world. He created it, and now you are His agent of change. So if you're going through a wilderness experience right now, don't think God's punishing you or that He has forsaken you. He's just allowing some things to die so that other things can be born in you and grow into fruitfulness. We all want good fruit. So be encouraged. You'll get through this. By God's grace, you will get to your destination. The truth is, the only way to reach the destination that God has planned for you is this little journey that you're taking right now through the wilderness. Stop, smell the flowers, listen to Him, and then get busy. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.